Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we are discussing about the Banking Regulation Act 1949. That's what we are covering now. Okay? And basically in the previous lecture we had started with the licensing criteria under the Banking Regulation Act 1949. Okay, like on what basis the license has been granted to the banks by the Reserve Bank of India. All right, so we will continue with the same topic. So this is the topic licensing and operations, which we had started in the previous lecture, and we had covered till licensing eligibility. Right, we had covered till then. Okay, but before this I had a question for you guys, and the question is original name of BRA. It is a very simple question. You have 10 seconds to think. Time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. The time's up. The original name was Banking Companies Act 1949, and it was introduced in 16th March 1949. In which year the name was changed to the Banking Regulation Act? That year was the 1st March 1966, when the Banking Companies Act was changed to Banking Regulation Act. All right. So it's just a little bit revision. Second question is that, because I have to ensure that whether you have revised or not. Okay, that's why I'm asking a question. To be granted as a scheduled bank, in which schedule the bank must be, you can say, present or mentioned or listed. All right. 10 seconds you have to think about it. The time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. The time's up. Correct answer is second schedule of Banking Regulation Act 1949. Okay. Thereafter, another question is that paid up capital for two banks. Scheduled banks, universal banks. 10 seconds you have. Time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. The correct answer is rupees 5 lakhs for the scheduled banks and rupees 500 crores for the universal banks. Okay. So it's just a quick little bit revision that we have covered. Now let's come back to the topic. So now we are going to talk about the types of banking licenses. Okay. Remember in the previous lecture when we were discussing, we had found out a point. And the point was the banking license provision or banking license granting criteria. It differs from bank to bank. All right, because we have many types of banks and we are going to just have a look. Because types of banks, we have a different lecture and the full detailed lecture of it. But right now, as we are discussing about the licensing criteria, so we will just have a overlook on the types of banks. So because there are many types of banks, so each type of bank having different criteria for licensing granting. Okay, and this is known as the types of banking licenses. The Act distinguishes between different types of banking licenses, such as the commercial bank license would be different, cooperative bank license would be different, and prescribes specific requirements for each, like on what basis the things would be done. Okay. Under the Banking Regulation Act 1949, there are different types of banking license issued to banks in India, each with its specific set of rules and requirements. These licenses include, the first is the commercial bank license. The commercial banks are full-fledged banks that provide a wide range of banking services, including accepting depositors, lending money, and facilitating various financial transactions. All right. All right. So basically, we could say the term commercial banks, it generally refers to the general banks. Okay. Like if I'm asking you the what do you mean by bank? What picture comes in your mind is that a bank is a place where we deposit money. Okay. Then the bank grants us the loans. All right. And between this process, they earn interest, means their income. Okay, that was a concept. All right. So these banks are known as the commercial banks, which means they are the full-fledged banks that provide a wide range of banking services, like various type of loans. But okay, like the personal loan, home loans, car loans, tour loan, all kind of things, which means wide range of banking. Also, they gives you various schemes like insurance schemes, saving schemes, okay, fixed deposit schemes. All right. And the basic function, accepting the deposit, lending the money, and facilitating various financial transactions. It means that you could get money in your account and you could transfer the money to another account. All right. And second thing is that beside this kind of individual services, they are also facilitating the trading activities, or you can say financial activities. All right. How? So remember I had told you that there is a concept of bills of exchange. Okay. Thereafter, the credit cards. Okay. Thereafter, check settlement and various other things which could be used for the trades. All these things could be entertained by the commercial banks. All right. So it means they are not only handling the regular customer or individual customer, but also facilitating the traders or merchants by providing various financial services. Okay. And the second and the foremost important point, which I have already provided you, these are the most common types of banks. Okay. So remember, these points we have discussed in this lecture. Sorry, in this point. Okay. Now let's move forward. These are the most common type of banks in India, are subject to comprehensive regulatory oversight by the Reserve Bank of India. All right. So as I have told you, these are the most common banks. All right. Like these are the ordinary banks. They are accepting the loans, accepting the deposits. Okay. They are granting the loans, a variety of loans, you can say. Okay. They are running various schemes of government. All right. And thereafter, the last thing is that they are also facilitating the traders and merchants. Okay. So various kind of things are being done by these banks. So that's why these are the most common bank. And being a most common banks, they are generally more vulnerable for economy. And why I'm saying this, these are generally more vulnerable for economy. What is the reason behind it? Because the sole reason behind is that these are treating with the common people and small merchants and traders. Because of this, their consumer base is huge, because they having the approach to the common people and the small merchants, and their consumer base is huge. That's why any issue with these banks may lead to negative implications on economy in high numbers. Okay, I hope that you are understanding what I'm trying to say. Okay, they are dealing with the common people, small merchants, consumer base is huge in nature, and any issue with these banks may lead to the negative implications on the economy in high number. All right, that's why the Reserve Bank of India pay special attention to these kind of banks. All right. Thereafter, The commercial banks can be further categorized into the public sector banks, the government owned, and private sector banks, privately owned, and the foreign banks with foreign ownership. Okay, so basically we could say the commercial banks are divided into three formats. Okay, the first format is the public banks. Second format is the private banks. The third format is the foreign banks. Okay, the public banks are those banks in which more than 50% shares holding by government. Okay, it means that their ownership has vested with the government. All right. Whereas the private sector banks are those banks in which the 50% shares holding by private players. All right. Whereas foreign banks are those banks which are incorporated in foreign country and their ownership is still vested with the foreign countries and now they are operating in India. Okay. And basically, if we talk about the public sector bank, then there was two main years, 1969 and 1980. In these years, something big was happened. My question is, what was happened in these in these 2 years? You have only 20 seconds to think, 10 seconds to think about it, and your time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. The 10's up. So in the 1969, 14 private banks got nationalized and their ownership transferred to the government. Right? What about 1980? 6 more private banks got nationalized and their ownership transferred to the government. Okay, that's why these 2 years are important. Okay, now let's move forward. Cooperative bank license. Cooperative banks are financial institutions owned and operated by their members who are usually individuals, small businesses, or cooperatives. All right. So basically, first of all, we have to deal with the introduction of cooperative banks in India. When was the cooperative banks introduced in India? Okay. So basically, they were first introduced by the Cooperative Credit Societies Act 1904. Okay, that was the particular act which introduced the cooperative bank in India. Okay, so please remember the things. All right. Second thing is that what do we mean by the cooperative bank? Okay. So basically, this is the bank which is formed by the contribution of several individuals or groups after funding the minimum paid up capital. All right. And the bank is exclusively for its members. All right. So this is the bank which is formed by the contribution of several individuals or groups after funding the minimum paid up capital, and the bank is exclusively for its members only. Okay. So let's understand it. Suppose there are 10 people. Okay. There are 10 people. These 10 people contributed 10, 10, 10, 10, 10, 10, 10, 10, 10. Okay. 10 lakh each. Total amount is 1 crores. Okay. After contributing this, they had established a bank named XYZ. So this bank will be known as the cooperative bank. Okay. The bank will provide us services like the deposit, okay, like the loans, okay, like other facilities, but only its members, which means these 10 people could use these kind of facilities. This is the concept of the cooperative banks. Okay, I think that you have got it. What do you mean by the cooperative banks? All right. And as we had discussed, these were basically introduced by Cooperative Credit Societies Act 1904. That particular act was the which you can say that was the particular act which established this kind of banks. Okay, so all its facilities are exclusively limited to its member. Okay, and anyone, which means like this person also wants to use this kind of facilities, then he has to be the member of that particular bank by contributing the amount. All right. So remember this point also. The banks are typically focused on serving the financial need of a specific community or the cooperative group which has contributed the money to the commencement of bank's business. Those who have submitted and cooperative, only those members could use the cooperative banks, you can say the resources. All right. Cooperative banks are subjected to regulation by the both Reserve Bank of India and the National Bank for Agriculture and Rural Development NABARD. Because first thing you have to understand is that the scope of banking operations of cooperative banks is limited. Okay, because the cooperative bank has or you can say has services exclusively for its members. Okay, that's why their scope is very, very limited. And generally, they are established by the group of farmers, low income individuals, okay, small businesses, business owners, you can say, and traders, merchants, and other things. All right. So, generally, generally, the regulation and oversight of the cooperative banks vested with the vested with whom? Vested with the NABARD. All right. But subject to be supervised by the Reserve Bank of India or RBI. So remember this thing. Okay. Thereafter, the payment bank license. The payments banks are the specialized category of banks that primarily offer payment services, remittances, and the ability to accept deposit but do not provide credit or lending services. Okay. So basically, these are the banks which are generally applicable to make the payments. All right. Okay. Like you can say, if you are using the various application, then you have got a notification to make the recharge. Okay. All right. To make payment of your EMI. All right. Or you can say to buy something new and make payment using and pay by using app XYZ. So this kind of things you have often noticed whenever you are using a mobile. Okay. So this kind of things basically comes from the payment banks. These banks are basically specialized in making the payments only. You could use them to make the payments. Okay. The recharge you are getting is you are making the payments. The EMI, you are making the payments. And if you're buying something new, you are making the payments. So generally you get the offer of cashback and credit, this and that. Okay. So these are the example of payment banks. And if we talk about the deposit criteria, like if the payment banks are the banks, then could they oppose the deposit? Sorry, could they accept the deposits or could they grant the loans? That must be the question arrive in your mind. So basically, first thing could be done by them. Second thing could not be done by them. Okay. They could accept the deposit, but they could not grant the loans. All right. And the deposit they could accept would only be the demand deposit, not any time deposit. Okay. And the maximum value must be up to 2 lakhs. It is the final value up to which it could accept the deposit. Beyond 2 lakh, they could not accept the deposits. All right. So remember this point also. These banks are designed to promote financial inclusion and facilitate digital transactions. They are subject to specific regulatory guidelines to ensure their focus on providing low-cost, efficient banking services. Because you can say the banks are already involved in many activities, like they are They are accepting the deposits. They are granting the loans. All right. They are making investments. Okay. They're running schemes. Running various schemes. So they are doing so many things. In this scenario, the payment banks could be a more better option for the individual to make their payments to settle off their claims. Okay, that's why they are designed in a special way to facilitate the digital transaction, and that's why they have their specific regulatory guidelines differs from the conventional banks because they are differ from conventional banks to ensure the low cost and the efficient banking services. We will have a detailed discussion on the payment banks when we were discussing about the types of banks. Till then, just revise the facts which I'm telling you right now. Okay. Thereafter, the small finance bank license. The small finance banks are banks that primarily serve the needs of the small and marginal customers, including micro and small enterprises, low income households, and individuals in rural and the semi urban areas. Basically, you can say they are especially designed to focus on small or marginalized clients. Okay. For example, we could say, suppose if this is a bank called XYZ. All right. And then it's having 10 customers who are asking for loans and investment. Okay. The XYZ is willing to make the investment, but only if they are earning 8% interest from their investment or from the loan. Okay, right? So out of these 10 customers, only the 6 customers are able to bear 8% interest rate. But the 4 customers are not able to bear it. So that 4 customers would be the small customers or marginalized customers. Because as a bank, the bank will focus on the customers who could offer him more interest. Okay. But what about these customers who got marginalized or got ignored? Okay. So that's why there are the banks called the small finance banks. All right. So these 4 customers who could not get the loan from a regular bank could reach the SFB or the small finance bank on which they could easily get the investment or the loans on the favorable terms. Okay. So that's why the SFB are important. All right. They are basically deals with the low income individuals, small enterprises, micro enterprises, and the rural and semi-urban areas people. Okay. They are authorized to undertake basic banking activities, including lending and accepting deposits. However, their customers are only the few customers, like marginal customers, semi or rural areas customers, but still they are allowed to lending the loans and accepting the deposits on favorable conditions to that people. Small finance banks are expected to prioritize financial inclusion and support economic development in under-reserved regions. All right. Wholesale bank license. Wholesale banks primarily serve large businesses, corporations, and financial institutions, offering a suite of specialized financial services. They do not provide retail banking services to individual customers. These banks typically deal with the larger volumes and higher volume transactions. So, on overview terms, you could say the wholesale banks like XYZ, they are generally those banks who are handling the very huge transactions. Like they are making the payment of rupees 1000 crores, rupees 500 crores, okay, rupees 10,000 crores, okay. They are making this kind of payments, huge payments they are making, okay. So That's why. Could you say that these payments are making by the individuals? Is it possible? No. Individual person could not make this kind of payments. All right. So these payments are basically coming from large corporations. Okay. From the government. Okay. From huge businesses. All right. So that's why the wholesale banks are basically the service provider to these kind of entities. They are not dealing with the individual person. They are not dealing with the general people like the commercial banks does. Okay. So remember, these points, they are always involved in the higher value transactions. Universal banks, as the name suggests, offer a comprehensive range of financial services to both retail and the corporate customers. It means that they are the mixture of commercial banks plus wholesale banks. All right. Like the commercial banks basically dealing with the individual people or retail banking. All right. Whereas the wholesale banks are dealing with the large enterprises or huge businesses. Okay. And the universal banks are basically the mixture of both of them. All right. They are dealing with the retail and the corporate customers both. They have the flexibility to engage in various banking activities, including commercial and investment banking, asset management, and insurance services. All right. Universal banks are subject to stringent regulatory requirements and are typically well capitalized because they are doing the work of both commercial banks as well as wholesale banking. Okay. And about the universal bank, we have a detailed discussion in the types of bank. The type of banking license determines the scope of services a bank can provide. It means, suppose if the XYZ having the license for commercial bank. Okay. So they could not provide the services for wholesale banking. Okay. So type of license a bank have determines what kind of services it could offer to the people and the specific regulatory requirements it must adhere to. Okay. The Reserve Bank of India issues these license, as we had concluded it before, based on the applicant's eligibility, capital adequacy, and the other criteria defined in the BRA and the other relevant regulations. All right. So students, in this lecture, we have done with the regulation and the operations under the BRA Act 1949. I hope that you have understood the session properly. Revise all the facts and figures before you have come for the next lecture. With this note, let's end this lecture and thank you.